Good morning. It's Friday, August 16th, about 6 a.m. Central Time. So overnight, the precious metals are mixed after yesterday's surge in prices. You have December gold up $10 at 25.02. September silver down 20 cents at 28.20. September copper down 385. That's the one we really want to watch at 411, and then platinum taking just a bit of a breather. So stocks rallied to one of their best weeks of the year. The S&P 500 had rallied about 3% this week. The Nasdaq up 5%. The data gave us a scenario where it looks like the U.S. should be able to avoid a recession. The initial claims came in a little bit lower than expected, showing that the labor market isn't deteriorating as fast as what we're anticipating, at least in this short term right now. And then retail sales came in a bit higher than expected. So if you watch the video yesterday, I was expecting a higher retail sales number. So there's also a lot of speculation that the carry trade with the yen is starting to continue to grow again, which should provide some kind of support under Asian stocks and then also U.S. tech stocks. So looking at the week on the metals market, copper and platinum up 3%. Copper is really the one that I'm watching. Silver got some legs yesterday, up 2.25. It was quite volatile for a while because silver was trying to figure out which way it was going to go. Was it going to trade with the gold market, which was underperforming because of the fact that if you look at the CME's Fed Watch tool, it went from 50 basis point cut down to a 25 basis point cut, being about 75% chance. So I think if we do get any kind of sell-off in the metals here today, it's most likely going to be crude oil's decline, which is down about $1.75 on speculation of Middle East peace talks, and then that weighs in the gold market as far as geopolitics, and then that may weigh somewhat into the silver market today. So looking at the calendar for economic data, we do have University of Michigan, the consumer sentiment, also the inflation expectations. Sometimes it's a mover and shaker, but not all the time. So once we get past those are right around 10 a.m. and then we should be looking pretty good as far as the ebbs and flows are just going to be traders jockeying around their positions. Again, looking back at the CME Fed Watch tool, 70% chance that the Fed only cuts 25 basis points. That's what people are really looking for. They're not looking for this deterioration because of the fact if you get that, it seems like everything was going to come to a grinding halt in the markets. Now, a couple things here. If you follow me on Twitter and then you also get some of our research from Blue Line Futures Global Insights, there is the discussion about this strike that's been going on for about 3 days now. And if you look, that corresponds with the bottoming action in the silver market, also the copper market, because Chile has entered its third day of strikes. So Escondida is the world's largest copper mine. It provides about 5% of the global copper supply, and the workers there, obviously, they want an increase in the profit share. So we're starting to see that's really the driving force. And last time what happened was we saw kind of this 1-2 punch where the Chilean copper miners go on strike, prices start to go up. Then next thing you know, China starts providing stimulus in their market, and then copper futures really get rocking and rolling to the upside. And that's what we're really hoping for here today. So we'll continue to monitor that, and then we'll also want to look at, the Shanghai, the warehouse stocks as far as copper, because of the fact that they're continuing to decline as well. And if you see that, chances are it is because China is trying to provide some kind of stimulus measures. Now, if you look at the gold market, gold futures are kind of hanging in, finding some type of pivot around the $2,500 area. I think that aggressive traders would use anywhere around yesterday's low to add positions on. A couple things to note: the dollar index is weaker right now. Also, 2-year treasury yields are coming off, which should be supportive for the gold market here. So my upside bias for the day is to that, just the upside. So again, copper, we want to watch that. We also want to watch that chart pattern, which is an upside down head and shoulders. Big line in the sand that copper needs to hurdle above is the 200-day moving average, and then if it could threaten anything close to 430, should be a breakout to the upside and should at least get things back range bound somewhere in the fours. Now, the silver market, really good action yesterday. One of the higher closes we've seen in quite a while. We're taking, again, a little bit of a breather here today. I think your key level is about the 29.10 level, where that's the 50-day moving average. 29.60 reverses that back to a neutral trend, and then we're probably going to need to break out over $30 probably in order to attract that ETF flows and things like that. The problem is that since really May, if you look at silver prices, they've kind of gyrated back and forth with a series of lower highs. So in that type of environment, you get more people that are trying to let go of some positions, trying to get back to break even, trying to reduce position sizing, rather than when you get the sideways consolidation and we come to the top and you break out to the upside. That's where the chasers start to come into the market and the ETF inflows. So again, couple things to watch if you're trading the metals. Keep an eye on the dollar index, keep an eye on 2-year treasury yields, watch the flows on the NASDAQ back and forth, and then keep an eye on that crude oil market. Again, down $1.83, Middle East peace talks are really what the driver is on that. You got any questions? I'm on vacation here, but reach out. I'll be available. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.